Well, welcome to the Consensus Trade. We're back. We're going to be going through various factors that are going in the markets, the trades that we like, and when we get consensus, when we get agreement, potentially it raises our risk profile around that and our certainty levels in that situation. So we'll be touching on a lot of those factors. Now, Blake, good to see you, my good friend. I wanted to touch on something which I think is really, it's well out there. Everyone knows about it, but it's not as reported as well as it should be. Everyone's focused on the SpaceX IPO, the Anthropic, and the OpenAI IPOs, which are coming pretty soon. But the Google raising we saw this week, $85 billion, to me is the really big deal out there in markets. You're talking about a company with a market cap of, $2.7 trillion. It has the highest annual revenue of any company in the US, in the world. Its cash flow has always been pretty good. That's obviously been burning down because it's committed to close to $200 billion in CapEx. But $85 billion for that company, and the market said, easy, we'll support that. And there's huge demand. What it does is it shows me, first of all, a shift now from the debt markets to the equity markets, from these big mega companies to fund that infrastructure spend. It also tells me that big buyers are happy to support. We saw Warren Buffett's Berkshire Hathaway giving them $10 billion in private funding there as well. It says a move away generally from the private markets and the debt markets. But it also shows that investors are saying, we think the world is good with AI, and we think Google is right at the heart of that with its Gemini models, with its TPUs. This has got a great future. The huge demand for an $85 billion. To me, that's the bigger issue that's out there. It shows that the world still sees AI is blowing up, and I think that's something that really needs to be respected because that is a really strong signal to the future of AI. What it also does is it talks to us about the SpaceX IPO, which I want to bring up now. Let's go to the consensus trade. Well, first one, Blake, I will start proceedings. We've got the SpaceX IPO coming out, expected to be on the 12th of June, priced on the 11th of June. We're already getting quite a lot of the details already coming through. We should be able to see more about that now. Now, question is it mooning or does it take a dive? I will start. I think it moons. I think we're talking about $1.77 trillion market cap. I think they're talking about retail getting in at $135 a share. I think it goes up. Personally, I think this is going to be a perfect trader stock, Blake. Why do I say that? 4% free float, obviously very small, but $75 billion. They couldn't really go much higher than that because they would have derailed the capital markets through funding. Everyone's selling out of other issues to sell out and fund that. But obviously, you've got poor free float. You've got an amazingly sexy concept, effectively, but you've also got a stock where people are saying, well, this is transitioning into a pure AI play, an infrastructure play on AI in the space economy. And they're moving away from its current business model and what will be. It's a concept, it's a vision. And therefore the analysts in the market were saying we can't really price earnings and cash flow with any kind of conviction. And execution risk is pretty high. They're going to need more funding as they go through that cash burn. And because of that lack of conviction, well, you get high volatility. So poor free float, really cool concept, Musk at the helm, and poor ability to price earnings, you're going to get massive volatility, which is good for some. And then you obviously get the big options kickers going through intraday and the ETF rebalances, starting with growth, the active side, but then going into passive further down the line. And you get a whole sort of flow show going through. But you're going to see symmetrical returns on the daily distribution. You're going to see 5% up days just as much as you're going to see 5% down days. And I like that from a trading stock. So once things settle down after a few days, the market gets into balance. I think you get a much more clearer rhythm. But I think initially it will have a pretty good run. And then I think, you could see some good selling opportunities playing in.
Well, if you're going to ask me, Westy, and if you're talking day one, I'm not getting involved. Do I think it moons? Sure. I've been involved in a lot of IPOs. My very first IPO was Pixar IPO. Before it was bought by Disney, I helped fund it. I was on one of the teams to fund Pixar way back when. So I've been in my share of IPOs. I'd rather let the dust settle a little bit. So I actually think it's going down right after the IPO. But it's all about timing when you're talking about these types of things. When I look at this SpaceX IPO, do I really want to own some? Absolutely. Do I want my grandkids, whenever I have them, to have some? Absolutely. Who doesn't want to own the first company to go to Mars?
Yeah.
At some point, right?
Yeah. So I think it rallies. I think it rallies at the start. I think it will then absolutely. I think they'll probably get punished pretty hard because it will just be trading on a crazy valuation and be so rich, people going out, and I think that will then present a buying opportunity. Yeah, absolutely.
I'm with you. All right. Well, The next trade I wanted to talk about is I want to talk about the dollar yen. The dollar yen is in it's in a little bit of yen intervention territory, don't you think? We closed above 160 today. So the question is, do we actually have enough in the tank to make it to 162? Do we make it to 162 before the Ministry of Finance intervenes, or are we going to get an intervention anytime, any moment now and drive us back down to 158 for maybe a buying opportunity? I think we are going to see some sort of intervention. I think we do make it to 158 before we make it to 162. It doesn't mean I want to be short, but that's my feeling. How do you feel about the yen right here?
Well, I think people are loading up on dollar yen at the moment are not worried about a 500-point rip to the downside. I mean, they're probably they're not trading with any leverage. Whoever they are is not concerned about that. But I am concerned about that. And yeah, this is what the MOF and the Bank of Japan want. They want people like me to be completely scared from shorting the yen because of what they can do. But we know that there's getting diminishing returns for their yen intervention every single time. But it's like a balloon that's being held, or a ball that's being held underwater. It just wants to come back up. And that's what you're seeing now at the moment. So, this market just doesn't like the yen. When we were seeing euro yen has been up for a while, Aussie yen's breaking out. I mean, they're Noki yen's doing all right. Euro, as I say, there's not many pairs against the yen which aren't doing well. So the dollar's done okay, and it's pushed up there. So to answer the question, I think 158 is probably where we're going to go in the short term. It does rely probably on the dollar falling out of favour. And that may mean that we're going to need to see pro-risk or cyclical areas of the market doing better, based on potentially an MOU if it comes with Iran and the US, and then growth and cyclical areas of the market outperforming and the dollar underperforming. So, do I think it's going to go down to 158? I have very, very low conviction. But I think, 162 as well seems like a tall order. So, I think it's a tough one. I think the easiest question is just, wait for it to happen, then wait for the market to show you that it's bottomed, and then get back in. Because I say it feels like you're holding a balloon underwater. What's not a balloon underwater? It's the opposite. It's Bitcoin and Ethereum and some of the other altcoins, of course. And now, seeing Bitcoin, it's had a really, really tough year. Michael Saylor, he sold some the other day, first time since 2002. Got a lot of headlines. Took 22. Got a lot of headlines. I think it's a bit of a red herring, personally. I mean, it's symbolic that the talisman of the industry is selling. But he told us that in the earnings call, and he sold 32 coins out of 840,000. So it is a bit of a rounding error, but it is symbolic in some capacities. What I think the bigger issue is that there's been a obviously momentum. There's asset price deflation in Bitcoin and Ethereum. If you want to go and buy it, you say to yourself, what's the catalyst? Not really too sure. Maybe it's going to be the Clarity Act being passed through the Senate that gives tokenization a better time for Ethereum. But why buy now when I could potentially buy at low levels? That's kind of the situation. And then why buy Bitcoin when I can go and buy a memory stock or buy one of the the AI plays that are absolutely ripping at the moment, HP, Dell, those kind of names, and that's it. So it's been a tough time. So there's an opportunity cost in a market that's going down. So at the moment, I still think there's further downside. And so, I want to give you levels, but we're breaking key technical levels now. It feels heavy. I don't necessarily know what turns it around. Buy the dip. No. Buy the rip after the dip. Let the market do the hard work. For now, I think it's going further down.
I think it's going lower too with Westy. I'm going to agree with you. And actually, I think if you're looking at targets, technical targets, we have a long-term bear flag target that comes in around 52,000. And, 52,000 is probably going to be a nice level that everybody's going to be looking at. But I'm with you. It's trading really heavy. I think a lot of things are going to end up funding not only SpaceX, but also is going to end up funding Anthropic and these two big, massive IPOs that are coming to the market. And people are selling Bitcoin. Why do I need to own it here? I can own it later. And instead, I'd rather own SpaceX. So I get it. I think it's going down in the very near term as well.
I think it's like, there's markets are fighting for a scarcity of capital, right? And it's like when going in your pocket, you've got $10 in 5 coins, and my oldest goes, "Oh, Dad, can I get an ice cream?" "Yeah, here's $2. My daughter goes, here's $2. My wife goes, here's $4. And then you're like, I've only got this left. And that's kind of what you're left with for Bitcoin and gold, really. Is you've got what are you going to do with that? You want to use the money for stuff that's working, right? And Bitcoin's not working at the moment. AI is working. And that's kind of it. The market is competing for that capital. You've got this liquidity drain from the IPOs, massive amounts of money there. and things are working. So you go to stuff that's working and you sell stuff that's not working effectively.
Well, speaking of which, let's talk about gold and our last trade here. Gold, we're trading just above 4,400. Do we finally get that bounce that everybody's expecting? Gold should be rallying in this type of environment, you'd think, but it's trading like a rock. It really is. So, are we going to see 4,200 or 4,600? I believe, like crypto and like Bitcoin, I think it's going to trade lower. Although those, as we move lower, is going to present some opportunities, in my opinion. But I believe we see 4,200 before 4,600. What are your thoughts on gold here, Chris?
Yeah, same. I'm in agreement. It's trading heavy. The market doesn't really know what to do with it at the moment. It doesn't. I mean, we've seen central banks coming out. I think the last data we saw from the Gold Council was a big central bank bid coming through from like Poland and places like that. But markets are saying again, yields are pretty high in the fixed income. We can get a decent real return. There's stuff working in the AI scene that makes money. You haven't seen it working as a hedge against any of the inflationary backdrop from higher crude prices. We still don't know what's going to happen there. The market just says we don't really know what to do with it. It's breaking to the downside of that range right now until I get a clear investment case and the market responding and saying that we all share the same reason to buy it, and you see a trend higher, momentum build. I think it moves to the downside. Yeah. Anyway, let's go to trade of the week. Right, so we've seen 3 different agreements from the consensus trade. We'll see how they play out. What I'm seeing at the moment now is the US 500, the equity side. Now, I talked about what was happening in Google. Really bullish. I think that's a really strong show of intent for anything that's partnered with Google over time. However, short term, the wheels are starting to fall off. There's so much money, so much love in the AI scene at the moment. And that people are starting to take that off. Now, I think what could be interesting, given the leadership that we've seen and the broad concentration, if we do see a memorandum of understanding, and it's a big if, I think tech could come under big pressure, and I think you're going to see people rotating into more cyclical areas of the market, and seeing some relief, potentially some airlines, consumer stocks, those things could benefit. And because of the weighting of these stocks, you may see some of the heat come out. Now, we've seen Broadcom coming out after market. Cracking results, 180% year-on-year sales growth wasn't enough. Market said, well, meh. Stocks down 12-13% after hours. It just shows you these guys have to hit the lights out. Now, I want to wait for the market to close below that horizontal support levels there, and I think that would just see then people moving more money out of the cyclical space or the IT space, the semi space. And that feeds the idea that if you're going to go and dance at the disco, you want to be closest to the exit point when the fire breaks out. And there's so much money in there, and rightly so. It's a beautiful space, and their pullbacks should be fairly shallow. But a breakout this horizontal support levels you can see there, I think you're going to see a further decline. That's where I'm going to be looking to take an aggressive short-term short.
Ooh, wow. Chris is getting feisty. All right. My trade of the week is going to be gold. And gold, I mean, I know a lot of traders saying, wow. And now, whoa and woes, they got probably a little bit of woes going on. I'm looking at that 200 DMA. You can see that red trend line, or red moving average, that's held up the buyers for, ever since we had that spike low back in March. And so if we get a daily close below that 200 DMA, we're going to be looking at an actual butterfly pattern, which should take us back below 4,000. I can only imagine that around 4,000 is going to have a lot of interest, but I actually think that we could trade below there in a Gartley extension. And like I said earlier in our consensus part of the segment of our consensus trade segment, that I believe that these lower levels are going to offer opportunities to be on the long side. So for those of you that are, gold traders, I think we might trade heavy in the very near term, but once we get below 4,000, I think that's going to be an opportunity to be on the long side.
Great stuff. Well, we've seen what we can consensus where the agreement is. I know a lot of people say that consensus is the wrong place to be. We're talking short-termism, and for me, consensus is a great place because that's where the flow of capital is all moving together. Investing is a whole different situation, but generally speaking, if the market's moving up, if you're a momentum, if you're a trend guy or girl, usually that leads to better outcomes, and that's why we like it. Anyway, we'll see you back next week for more of the consensus.